Yeah, we're done. So I was trying to establish a fact in part one of this video. So I added the 20 moving average here, and again I added the Bollinger Band, but we only saw one. Let me go over it again. Um, delete Bollinger Band, delete. Okay. Now on our screen we have the 20 moving average, as you can see. The 20 moving average. We have the 20 moving average. This is it. And we want to apply the Bollinger Band. So click on it and then plus Bolliger Band. So you just make it series. Okay, 3 done. That is it. Now the Bolliger Band is having this 3 band. The top Bolliger Band, the top Bolliger Band, the middle Bolliger Band, the middle Bolliger Band, and the lower or the bottom Bolliger Band. So Bolliger Band always come with 3 for those who do not understand it before now. For those who are new to Forex, it always come with TV band. So that is it. But where is the simple moving average? The simple moving average is underneath. It's underneath the middle Bolliger Band. It's underneath the middle Bolliger Band. Why? Because the middle Bolliger Band also serves as a 20 simple moving average. They come with the same parameters. That is why you cannot see it. The middle Bolliger Band is covering it. So if I go over and delete the moving average, delete. Now to delete an indicator, all you have to do is click on this delete button first. Once you click on it, it will show you these two bars. Click on the one you want to delete, check it. Once you check it, you go over back and click on this delete button. So you delete. Now once you check, now you have the Bolliger Band. Now I want to apply the 20 moving average again and see what will happen. It will overlay. Okay, moving average 20 done. You see, it has overlay covering the middle Bolliger Band. So they use the same parameters. The reason I'm doing this, showing you this, is to help you understand something as we're going further. So now you see, when price cut below the 20 moving average and then MACD start trending up above the 0 MACD line, we take a buy trade. So this is the 20 moving average. So note that this 20 moving average is also the middle Bolliger Band. I don't know if you get it. This 20 moving average is also the middle Bolliger Band. So that is it. So in the strategy, we're not going to be using the 20 moving average. Why? Because the middle Bolliger Band is the 20 moving average. So whenever we're talking about the middle Bolliger Band, know that we are talking about the same 20 moving average. The middle Bolliger Band and the 20 moving average are the same thing. So that is a fact I want to establish first for you to understand. Now, how do people trade the Bolliger Band strategy? People trade it in different ways. Some wait for it to hit the top Bolliger Band and then they sell down. Some wait for it to hit the top Bolliger Band, they sell down. When it touch the bottom, they buy up. But how are we trading it? How are we trading it? This is how we trade it. When price cuts below, once price cuts below the middle Bolliger Band, this is it. We are having a trigger. This is a trigger for us, a signal to sell. When price cuts below the middle Bollinger Band, a trigger to sell. Now we'll move down to confirm whether price starts ranging downward on the MACD below the MACD 0 line. Yes, it is. So we take a sell trade, and then we would have sell all the way down to this point. So that is it. Now, when do we buy? When price cuts above the middle Bollinger Band line or the 20 moving average, and then we are seeing this is occurring. Mark D is corresponding. We take a buy trade, and then we would have bought all the way to this extent. That is it. Okay, so let's remove all these from our charts. Remove. Yeah, P remove. Okay, that is it. I will now go over to the uh, MT4. I'll go over to MT4. I've been working on MT5, so we go over to MT4. This is the MT4. MT4. Okay. 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 Now let's apply the strategy here now with MT4. So delete. So this is an empty chart. This is an empty chart, and we are applying now. The first we're going to apply the Bollinger Band. This time we're making it 3.1 on the deviation period 20. Done. This is it. Now we're going to apply again, this time the moving average, convergence and divergence, which is the MACD. Moving average, convergence and divergence. Please take note of these parameters. This is the parameters we're going to be using henceforth. I'm going to be using 5, 12, 9, no longer the default MACD. 5, 12, 9. The reason is that the default MACD usually gives us a delay. So we were looking for what will give us a trigger and a signal at the same point, and then take the trade. So we're going to be using this. Done. 5, 12, 9. Done. This is it. And then we're going to be applying another MACD, moving average, convergence and divergence. Now this time, take note, do not click on this button to add another MACD. No. Instead, click on this first button. So this is it. We scroll down and check for MACD. This time we're going to be applying the MACD should be 6, 17, 1. Yeah. So we're gonna change the color so that it will be the same as that other one there. I don't know if this would be better. I need something sharp but different from the other one. I think they are the same. Okay. We need a green color. Okay. Seems okay. Okay. That is it. Okay. Now we've applied the moving average, convergence and divergence MACD, which is this parameters 5, 12, 9. We've applied another moving average, convergence and divergence MACD, which is 6, 17, 1, which is this, and then we've applied the Bollinger Band, which has its 3 bands. That is it. Now watch what happened. We take a sell trade from here. As you can see, this is a sell trade going on. When price caught below the middle Bollinger Band, and then MACD start trending downward, we took a sell trade here at USD JPY. As you can see, it's really selling. It's doing well selling for us. USD JPY, as you can see, it's selling here. is selling here, and also is selling here for us. So that is it. You saw how it went. Okay, now this is not all to hit. This is not all to hit. I want to explain this order moving average here. This is the moving average we want to give a great respect in this strategy. The 671. We want to give it great respect in this strategy. Now, let's check backward. As you can see, we have a signal here to sell, to buy. Price just cut below. We want to check for this one. Ensure this one is above. Now, one thing we want to do, ensure it's above. It is above. If this one has given us an above signal, do not take the trade if this one has not given you. If this first MACD has tell you price is above the 0 MACD line, still wait. Just know that that is a signal for you, but obey this one. Let this one give you a signal before you move. So once this one take a signal upward, you move. There are cases, you will miss cases whereby the top one will give you a signal, but the down one is still has not given you a signal yet. So obey the second MACD. Always obey it. So we're going to be using them together. Now, why do we use them together? First of all, you see that this MACD, the signal line, it's just is sticking close to the histogram, but in this one they are spreading out. It's not sticking close to it. It's not sticking close to the edge, as this one is sticking close to the edge of all the histogram. The signal line is sticking close to the edge of all the histogram, but this is not like that. So this one tells us that a buy trade is coming, because we know when price starts ranging, when MACD histogram starts ranging above the signal line, then we're having a buy signal. So we know a buy signal is coming already from this point. When we see this, we know a buy signal is already coming, is already on its way. So when we get to this point and then we see this price just cuts above, and MACD starts trending upward above the 0 MACD line, and then share this other one too start trending. We want to take a buy trade from here. Boom. That is it. So take a buy trade. We take a buy trade. Now I want you to know that when price starts trending, once MACD histogram starts trending upward above the signal line, is a signal that a buy market is about to start. So although we do not take the trade, we have to wait for price to cut above the middle Bollinger Band, and then MACD to start trending upward before we take the trade. So this is it. So while we have two MACDs for our confirmations entries, this one also give us an exit signal as well. This one give us an exit signal. This one give us a sure entry signal. This one give us an exit signal. We also use this for entry and exit, but we use this for entry alone. So that is it. Now, those noise that we talked about, they are still there. Those noise have not been filtered out. Those noises have not been filtered out. For example, as you can see, this noise here. You take a buy trade here. There is a buy signal here. We would have entered trade, even not even here. Like I told you, do not obey this one. Do not obey this one. You see, price cut above 20, the 20 moving average and the middle Bollinger Band at this candlestick, and then this MACD, this first one, give us an entry, a small entry. But moving down to this point, this MACD has not given us an entry signal. So one price move up again, you see one candlestick has raised up. Now this one is still giving us an entry signal, but look at this under one, still has not given us. So when price come down again this way, up, price move another candlestick upward. This one is still giving us a signal. Now when we check out this last one, it has given us a signal. So this is where you want to enter the trade. But you see now when you enter the trade, boom, a buy trade. When you enter a buy trade here, what happens? Price begins to come down. So you see why it worked well at other places. So if you have taken the trade from here, you would have made money. So maybe you've closed that trade, maybe the next day you saw this signal and then you enter this trade, you would have lost money. So we need to filter all these out. Now to filter all these out, we have to have some other indicators. First of all, we're going to add the RSI, relative strength index, which is the RSI in short. Click on, sorry, I went and add the relative strength vigor, delete. Okay, RSI, relative strength index, this is it. This is it. So you click on it. Yep, 14, and make the levels to be 15. For those who do not know how to add levels, usually you see it as 20 or 30, 70. So to change it, you click on this button here, this pencil button. Usually you would have seen one here like this, 70. So I'm doing this so that those who do not understand will not start asking me questions. Usually see it like this. Yeah. So usually see it like this, 20, 70, 30. So what you have to do is click on the button. So you delete, click on delete to delete one of them. We need just one. So you click on the delete. Once you delete, select the way you want to delete just one of it. So you select that one and then click on the delete button again to delete it out. Delete. Now we have just one. All you have to do is edit that 30 and make it 50. Then you can change the line, the color line. Then you can change the preset if you want to make it more bold. And then you go back. Now you see you edit it. There's nowhere to click on OK. So all you have to do is click on back button. Since there's nowhere to click on OK, you click on back. You see it has applied to 50 levels, and then you go back. Okay. Now this is, please, if you have just been listening through, I want you to put your head down here, because this is how we take a trade. This is how we take a trade. Please understand all these things. Why the BAS BMA strategy is very simple, because it's giving you a clear signal. When you're looking at this chart, you know whether to buy or not. Take a look at it. Look at the middle Bollinger Band. Price just cut it down, and then we are seeing at that same line, the first MACD has started trading downward. Second MACD has started trending downward as well. So we know, it is clear for us to know that this is a buy, this is a sell signal. It is very clear. Now we are adding the last one, which is the RSI. We are only going to take this trade on one condition. This trade we are seeing here, we are going to take it on another condition, that RSI has cut below the 50 line. This is the RSI line. You see how it's moving upward and down. We will take this set trade only if RSI has cut below this 50 line. I don't know if you get me. If this RSI has not cut below, do not take a trade. If it's just touching it as the line, do not take a trade until it cuts and cross below before you take the trade. So this was what I confirmed before taking all the trade. I confirmed all of these before taking all the trade. So as you see, this is it. I took the trade here. It's still coming down, and I observed that it has not even formed another signal, another MACD histogram, and it has come down below this point. So I took another trade here again. That was how I did it. So you see, we're getting a trigger, a signal, and multiple confirmations to ensure that ADX line, and then the green line presents a positive line, and the red line presents a negative line, which is to give you sell signal. The green give you a buy signal, and the ADX line, once it's above 30, we know that we are not experiencing any consolidation, because when markets are consolidated, um, sometimes you do not get to know on time that the market is already consolidated, and then we'll take trades. And then after like some minutes after we've taken trade, we began to see that this market is not moving, and we began to see that this market is consolidated. So the ADX help us to avoid those consolidated markets. Now, how do we avoid it? Now, this is it. Once price is up, once sorry, not price. Once the yellow ADX line is above the 30 line, we know for sure that the market is good for us to go into the markets. But when the ADX line is below the 30 line, we want to avoid taking trade. For example, we have these O points, from here. You see, ADX was below, and one thing we want to avoid is when ADX is tying with all of these. We want to avoid it. When we see the ADX line and this other positive and negative line being tied together, avoid taking any trade. So you see all the way down to this point, so as to see the market didn't do anything significant. You want to avoid taking trade in this area. So you see, when you have a signal to price cut above the middle Bollinger Band, and then you have a MACD signal confirmation, and then RSI is pointing upward, cut below the 50. Now you want to take a buy trade, but ADS is telling you do not buy. lower time frame. That is why we want to avoid trading with lower time frame. So as you can see, this has been a sell market. The simple thing is that there is a lot of noise in the lower time frame. Do not trade it here. Do not trade here. 15 minutes. I hardly trade on 15 minutes, but I trade 15 minutes with a strategy. If you are a scalper, you want to be scalping, you can trade with 15 minute time frame. You can trade with 15 minute time frame for scalpers. For those who want to be swing trading, I prefer you trade on 1 hour time frame and 4 hours time frame. These are the two best time frame because whenever every confirmations are correct, for example, we have all confirmations correct here, all trade to be sure for us to sell. Now we sell at this point. If you have closed your trade at this point, this is a 4 hours time frame. You see the pips will catch. Come on, look at it. If you have closed your trade at this point, calculate what you would have cashed from year to year. This is the price, and this is the price. Calculate. This is on the 4 hours time frame. Without you closing an entry. Suppose you are trading on a 15 minutes time frame. I believe you must have closed trade, open trade, close trade before you even get to this point. So trade on a 4 hours time frame, or you trade on a 1 hour time frame. That's what I do. These two time frames. Trade on these two time frames. You are going to get a good result, a very good result. Take note, on a 1 hour time frame, one candlestick is equals to 1 hour. So when you have this confirmation here to buy, though ADS was below, so we may not have entered that trade. Okay, we have a signal here. When you buy here, it took 1 hour to be, on a 1 hour time frame, on a higher time frame, the spread becomes more tinier. Although the spread is the same, but looking at it on your chart, it's very tiny, and it may not look as if it's holding you backward. So if you have entered this trade from here, you would have seen that it will go your way upward to this extent, 1 hour. So you don't have to be holding your phone all the time. You see 1 hour, maybe the next 1 hour time you check it and see what is happening in the markets. You see you're on profit. You could decide to close on profit there, or wait. So that is it. The next part will give you how to close trade on the basket strategy. But remember, trade the basket strategy on 1 hour, 4 hours time frame, even a weekly time frame for best results. The truth is, if you go down to 15 minutes, 5 minutes, you're going to get the same entries and the same signals and informations. You're going to get them exactly the same way. But trend in those lower time frames are short-lived. They are usually short trends. But even if you catch a very short trend on a 1 hour time frame, a short trend, then you're going to make a lot of money from that short trend. So even if you are catching a huge trend, you're going to be making a huge money from that huge trend on a 1 hour and a 4 hours time frame. My recommendations, remember my recommendations, 1 hour, 4 hours, you'll benefit more from that. Thank you.